Hi, my name is Alia Rosidi and my matric number is A22A0217. And I'm going to present about the background company, the introduction of Post Malaysia, Berhad and GDEX. First is Post Laju, is a Malaysian Korea giant since 1986, zipped through e-commerce with reliable deliveries, backed by an intensive network and tech-driven tracking. Its name meaning fast post. Live up to its speedy service, connecting people and businesses across Malaysia. Next is GDEX. GDEX is founded in 1967. Is Malaysia leading express delivery and logistic player, offering service beyond just courier, like warehousing and e-commerce solution. Known for tech-driven efficiency, they are adapt to the e-commerce boom, becoming a major force in the sector.
Assalamualaikum, my name is Siti Binti HASAN. My matric number is A22A049. For today, I would like to discuss about business nature. Post Laju Malaysia and GDEX are two of Malaysia's top logistic and shipping firms. Post Laju in the Korea branch in Malaysia give you a service that 1,800. Providing domestic and international courier service such as deliver mail and parcel destination within Malaysia and around the world. Providing traditional postal service such as stamp sale and letter delivery. Post Laju also provide logistics service that offer range of service such as warehousing, transportation, and supply chain management. All that include the receipt and delivery of postal items. Not only that, Malaysia Express a push in all modern era by providing e-commerce service. Post Laju Malaysia provide e-commerce solution such as delivery and fulfillment service to online retail system. The nature of GDEX business and involve an intensive delivery networking throughout Malaysia. There are the service provided by GDEX that is GDEX same day, GDEX next day, GDEX overnight express, GDEX AM express, GDEX next day delivery Sabah and Sarawak, GDEX worldwide express. GDEX always strive to deliver customer to goods quickly and safely to the desired destination. This is include the use of the latest technology to improve the efficient operation. Thank you, that's all for me.
Hi, Assalamualaikum. My name is NORHAIZA ROSLI and my matric number is A22A034. Now we continue to present the summarized ratio of post Malaysia Berhad. The first one is current ratio. The highest value is shown in 2021, which is 5.36 times, and the lowest value is shown in 2022, which is 0.78 times. The second is quick ratio. The highest value is also shown in 2021, which is 5.25 times, and the lowest also shown in 2022, which is 0.78 times. And the third is eventually turnover. The highest value is shown in 2021 also, which is 0.51 times. And the year 2020 and 2022 is same, which is 0.25 times. And also total asset turnover, which is the highest value is shown in 2021, which is 0.79 times, and the lowest value is shown in 2020, which is 0.47 times. And next, fixed asset turnover, which is the highest value, is shown in 2022, which is 1.78 times, and the lowest value is shown in 2020, which is 1.64 times. And next is debt ratio. We will see the debt ratio. The highest value is shown in 2020, which is 13.71%, and the lowest value is shown in 2022, which is 29.96%. And the last is time interest earn ratio, which is the highest value is shown in 2022, which is 3.75 times. And years for 2020 and 2021, it's same value, which is 2.99 times. And the next is profitability ratio. The first one is net profit margin. You will see that the value and or the highest value is same, which is in 2021 and 2022. Is 9.71%. And the lowest value you will see in 2020, which is 0.06%. The next is return on equity. The highest value is in 2020, which is 26.95%. And the lowest value in 2022, which is 25.95%. Next is gross profit margin. The highest value in 2022, which is 23.11%. And we will see that the lowest or the zero value in 2020. Next is return on investment. We will see that the highest value in 2022, which is 18.56%. And the value is 2020 is negative, or the lowest value, which is negative 81.5%. Next is operating profit margin. We will see that the highest value in 2021, which is 10.85%, and the lowest value in 2022, which is 4.72%. The next is operating return on asset. 2021 and 2022 have a same value, or the highest value, which is 9.53%, and the lowest value in 2020, which is 4.74%. And the last one is return on sale. We will see that the return on sale also have the same value, or the highest value are same, which is 10.85% in 2021 and 2022, and the lowest value in 2020, which is 4.50%. Thank you, Prof.
Assalamualaikum warahmatullahi wabarakatuh. My name is Siti and my name is A22A0433. Today I will continue to present about Sakura's review of Chile Express Neighborhood. I will continue with the first point, which is current ratio. Current ratio, the highest value is shown in 2022, which is the value is 4.90 times, and the lowest value is shown in 2021, which is the value is 1.67 times. Next, about the quick ratio. The highest value is shown in 2022, which is the value is 4.86 times, and the lowest value is shown in 2021, which is the value is 1.64 times. Next, about the inventory turnover. The highest value is shown in 2021, which is the value is 9.90 times, and the lowest value is shown in 2022, which is the value is 1.50 times. Next, about the total asset turnover. The highest value is shown in 2021, which is the value is 0.67 times, and the lowest value is shown in 2020, which is the value is 0.55 times. And the fixed asset turnover, the highest value is shown in 2021, which is the value is 1.11 times, and the lowest value it's shown in 2020, which is 0.94 times. I will continue to the debt ratio. For the debt ratio, the highest value is shown in 2020, which is the value is 24.33%, while the lowest value is shown in 2021, which is the value is 12.31%. Next, about the time interest earned ratio. The highest value is shown in 2022, which is the value is 3.64 times, while the lowest value is shown in 2020, and the value is 2.63 times. Next, I will continue my presentation to the net profit margin. The highest value is shown in 2021, which is the value is 7.95%, and the lowest value is shown in 2020, which is the value is 0.05%. Next, about the return on equity. The highest value is shown in 2021, which is the value is 57.36%, and the lowest value is shown in 2020, which is the value is 10.71%. About the gross profit margin, the highest value is shown in 2020, which is the value is 25.08%, and the lowest value is shown in 2021, which is the value is 4.01%. Next, about the return on investment. The highest value is shown in 2020, which is the value is 76.5%, while for the years of 2021 and 2022, it's the same value, which is 7.65%. For the operating profit margin, the highest value is shown in 2021, which is the value is 10.19%. For the year of 2020 and 2022, the value is the same, which is 4.78%. We move to the operating return on investment. The highest value is 6.79%, and for the 2020 and 2022, it's the same value, which is 2.43%. And the last one is return on sale. The highest value is shown in 2021, which is the value is 10.19%, and the lowest value is shown in 2022, which is the value is 4.78%. That's all for me. Thank you.
Morning to my loving lecturer. My name is TANUSHA. My metric number is A22A0808. My part is to identify the horizontal of Post Malaysia Berhad and GDEX Express Sendirian Berhad.
For Post Laju Malaysia, the company with current ratio 0.9 might struggle to meet short-term obligation, while the another current ratio 5.36 has ample liquidity with a current ratio of 0.78. For GDEX Express, the company current ratio range from 1.67 to 4.09, indicating a significant fluctuation in liquidity over the analyzed period. Come back to the quick ratio of Post Laju. It has 5.31 and 5.35 possess significant liquidity and easily cover short-term obligation. The company with a quick ratio of 0.78 might face challenges in the short-term rebates, whereas the GDEX Express exhibit the 1.67 to 4.86. Moving to the inventory turnover of the Post Malaysia, it shows that 0.25 have a slow inventory movement and weak demand. The company with a 0.51 GDEX Express company has improved from 7.63 times to 9.90 times, indicating a more efficiency inventory management strategy. However, company in 2022 turnover dropped from 9.90 to 1.5 times. Moreover, for the Post Laju, the total asset turnover of 0.74 and 0.72 are utilizing the asset moderating for sales generation. With a 0.79, turnover demonstrate a slightly higher efficiency, while the GDEX Express improved their total asset turnover from 0.55 in 2020 to 0.67 times in year 2021. However, in year 2022, the turnover dropped to 0.58 times. Turning to the fixed asset turnover of Post Malaysia is 1.64 and 1.78 are utilizing their fixed asset efficiency for revenue generation. With the company turnover demonstrate is 1.77, while the GDEX Express fixed asset in year 2020 and 2021 shows that 0.94 increased to 1.11. However, in year 2022, the fixed asset turnover dropped to 1.08. Moving to the debt ratio of Post Malaysia is 30.71% and 30.33%, 29.96% debt ratio has been shown on 2022. While the GDEX Express debt ratio with a value of 24.33% and 13.31% and 18.05% for the respective calculation. With the interest earn ratio of 2.99 shows good debt leverage in financial for the post-Malaysia. The company priced with 3.75 times after adjusting for non-requiring expenses, while the GDX Express has a capacity to cover its interest obligation with 2.63 times and 3.33 and 3.64 times for respective calculation. In 2020 has a rising peak net profit margin of 0.06, indicating minimal profitability from its total sales. In 2021 and 2022 have a higher net profit margin of 9.71%, while the GDX Express, the company profitability with a margin of 0.05, 7.59% and 4.74%. Nextly, Post Malaysia in 2020 has a high return on equity of 26.95%. However, in 2021 and 2022 follow closely with the impressive figure of 26.24% and 25.95%, while the GDX Express is generating the profit from shareholder equity with returns of 10.71, 57.36% and 36.83% for the respective calculation. Post Malaysia in 2020 operate with 0% of gross profit margin, indicating their implied significant cost the entire consume their revenue. Although in 2021 and 2022 maintain their healthier net profit and gross profit of 7.45 and 23.11% with a larger portion of their revenue. For the GDX, the gross profit margin reflects the company profitability, which is 25.08%, 4.01 and 16.13% for the respective calculation. In 2020, the Post Malaysia experienced a negative return on investment of negative 81.5%. They have lost over 80% of initial investment. Then the company in 2021 generate a low ROI of 0.25%, and also in 2022 their boost of 18.56%, demonstrating a successful investment. While the GDX Express, the return on investment will be same amount for the 3 years, which is 76.5%. Moving to the operating profit managed of Post Malaysia from 4.72% to 10.85%, indicating moderate to strong efficiency in converting sales to profit before accounting to tax. While the GDX Express, the company profitability from its core operation with margin of 4.78%, 10.19% and 4.78% for respective calculation. On the operating return on assets for Post Malaysia range from 3.38% to 8.53%, moderating the strong efficiency in converting asset to profit. While the GDX Express generating operating income relative to its total sales with value 2.43%, 6.79% and 2.43% for the respective calculation. But not least, for the Post Malaysia, the company's returns of sales range from 4.50% to 10.85%, indicating moderate to strong efficiency in converting sales to profit. While GDX Express, its core operation with a value of 6.52%, 10.19% and 4.78% for the respective calculation. For the vertical analysis, in 2020, for the current ratio, is Post Malaysia Berhad as a current ratio of 0.9 times, indicating its ability to cover short-term liability, while GDX Express Sdn Berhad at the current ratio of 4.73 times, suggesting a relative stronger liquidity position and capability to meet short-term obligation. In 2021, Post Malaysia Berhad achieved a current ratio of 5.33 times, showcasing a robust ability to cover short-term liability, whereas GDX Express Sdn Berhad has a current ratio of 1.67 in 2022. Post Malaysia Berhad exhibit with a current ratio of 0.78 times, indicating a decreased ability to cover short-term liabilities, while the GDX Express Sdn Berhad had a 4.90 times, which is a solid liquidity position. Moving to the quick ratio, 2021, Post Malaysia Berhad has a quick ratio of 5.31 times, indicating a strong ability to cover short-term liabilities, while the GDX Express Sdn Berhad had a quick ratio of 4.71 times, reflecting a robust liquidity position. In 2021, Post Malaysia Berhad demonstrate a quick ratio of 5.33 times, indicating a strong ability to cover short-term liability, while the GDX Express had a 1.64 times, suggesting a relative lower liquidity position. Lastly, in 2022, Post Malaysia Berhad at a 0.78 times, indicating a decreased ability to cover, while the GDX Express had a quick ratio of 4.90 times, suggesting a solid liquidity position to meet short-term obligation. Moving to the inventory turnover, in 2020, Post Malaysia had an inventory turnover of 0.25 times, while the GDX Express had an inventory turnover of 7.63 times, a higher efficiency in managing and selling inventory over the same period. Move on to 2021, Post Malaysia Berhad had an inventory turnover of 0.51 times, showing a slightly improvement in the frequency, while GDX Express had a 9.90 times, indicating further increase the efficiency of managing selling turnover. Lastly, in 2022, Post Malaysia had maintained an inventory turnover of 0.25 times, similar to 2020, while the GDX Express had 1.50 times, indicating a decrease in managing and selling inventory compared to the previous year. Next, for the total asset turnover in 2020, Post Malaysia had 0.74 times. It generated a sales equivalent to 74% during the year. While GDEX Express had 0.55 times, it's also generated equal to 55% during the same period. 2021, Post Malaysia achieved total asset turnover of 0.79 times, an improvement in generating sales compared to the previous year. While the GDEX Express had 0.67 times, suggesting a slight decrease in converting asset into sales. 2022, Post Malaysia had 0.72 times, a moderate efficiency in generating sale relative to its total sales, while the GDEX Express had 0.58 times, a decrease in efficiency compared to the previous year. Moving to the fixed asset turnover, in 2020, Post Malaysia had a fixed asset turnover of 1.64 times. It generated sales equivalent to 164% during the year. While the GDEX Express had 0.94 times, it also generated sales equal to 94% during the same period. In 2021, Post Malaysia achieved fixed asset turnover of 1.77 times, an increase in generating sales compared to the previous year. While the GDEX Express had 1.11 times. Conversely, in 2022, Post Malaysia maintained fixed asset turnover of 1.78 times, a consistent ability to generate the sales, whereas the GDEX Express had 1.0 times, as a slightly decrease in efficiency compared to the previous year. Lastly, moving to the next of debt ratio in 2021, Post Malaysia Berhad at a debt ratio of 30.71%. Its total asset were the financed by debt, while the GDEX Express had 24.33%, suggesting that its total asset were financed by debt during the same period. In 2021, the Post Malaysia had a debt of 30.33%, were financed by debt, while the GDEX Express had 13.31%, suggesting its total asset financed by the debt during the same period. Lastly, in 2022, Post Malaysia debt ratio of 29.96%, while GDEX Express at 18.08%, total assets were financed by the debt during this same year. Time interest earned ratio in 2020, Post Malaysia had 2.99 times. Its interest expense almost 3 times with the net operating income, while GDEX Express Sdn Berhad had 2.63 times, suggesting a slightly lower but still adequate coverage of interest expenses by its net operating income. In 2021, Post Malaysia had maintained their time interest earned ratio of 2.99 times, whereas the GDEX Express increased its 3.33 times, an improvement ability to cover interest expenses with net operating income. Lastly, in 2022, Post Malaysia had increased to 3.75 times, and just ability to cover interest expenses 4 times, while the GDEX Express maintained to 3.64 times, a consistent and robust coverage of interest expenses. Nextly, for the net profit margin in 2020, Post Malaysia had 0.06%. Its total sales into net profit, while the GDEX Express had net profit margin of 0.05%, were retained as a net profit during the same period. In 2021, Post Malaysia achieved to 9.71% translate into net profit, whereas the GDEX Express Sdn Berhad had 7.59%, were retained as a net profit during the same period. Lastly, in 2022, Post Malaysia had maintained their net profit margin to 9.71%, while GDEX Express had 4.74%. Its total sales were retained as net profit during the same period. Moving to the return on equity in 2022, Post Malaysia had 26.95%. It generated on its common equity, while the GDEX Express had 9.71% its common equity during the same period. And then, in 2021, Post Malaysia achieved to 26.24% on its common equity, while the GDEX Express had 57.36% as a nobility higher return on common equity during the same period. Lastly, in 2022, the Post Malaysia achieved to 29.95%, while the GDEX Express had 36.83% in common equity during the same profit margin. In 2020, Post Malaysia did not provide any specific value for gross profit and sales, so the calculation will be 0%, while the GDEX Express Sdn Berhad had gross profit margin of 25.08 during the same period. Then, in 2021, the Post Malaysia Berhad achieved to 7.45%, were retained as gross profit, whereas the GDEX Express Sdn Berhad at 4.01 as a gross profit margin during the same period. Lastly, in 2022, Post Malaysia achieved to 23.11%, while GDEX Express Sdn Berhad had 16.13%. Its total sales were retained as a gross profit during the same period. Moving to the return on investment, in 2020, Post Malaysia had return on investment negative 81.5%, indicating a negative return relative, while the GDEX Express had 76.5% positive return in total investment. And then in 2021, Post Malaysia had achieved to 0.35% as a low positive return on investment, while the GDEC Express had 7.65%, a higher positive return on investment during the same period. Lastly, 2022, Post Malaysia had achieved to 18.56%, while the GDEC Express maintained a return on investment 7.65% as a consistent positive return on the total investment during the same period. Next to the operation profit margin, in 2020, Post Malaysia had 6.45% were retained as an operating profit, while the GDEC Express had 4.78% as an operating profit during the same profit. In 2021, Post Malaysia achieved to 10.85 as an operating profit, whereas the GDEC Express had 10.19 were retained as an operating profit during the same period. Lastly, in 2022, Post Malaysia achieved to 4.71%, while the GDEC Express maintained a return on investment of 4.78% as an operating profit during the same period. To the operating return on asset, in 2020, Post Malaysia Berhad achieved an operating return on asset of 4.74%, while the GDEC Express Sudirman Berhad had 2.43% total asset convert to the net operating turnover. In 2021, the Post Malaysia achieved to 8.53%, whereas the GDEC Express Sudirman Berhad at 6.79% of its total asset were net operating income during the same period. Lastly, in 2022, Post Malaysia had achieved 8.53%, indicating its total asset were converted into the net operating income, while the GDEC Express Sudirman Berhad had 2.43% of operating return on the asset on the same period. Last but not least, in 2020, the Post Malaysia achieved a return on sales of 4.50%, while the GDEC Express had 6.52%. Its net sales were retained as an operating profit. In 2021, Post Malaysia had achieved to 10.85%, while the GDEC Express had 10.19%, suggesting its net sales were retained as operating profit on the same period. Lastly, in 2022, Post Malaysia had maintained a return on sales of 10.85%, its net sales as operating profit, while the GDEC Express had 4.78% during the same period. Thank you.
Assalamualaikum and hi, my name is Nordina Minta RADZIF and my matrix number is A22A0279. Based on the ratio analysis table, we can see that GDEC Express get more profit annually compared to Post Malaysia Berhad. We can see that Post Malaysia Berhad profitability is decreasing annually. So there are several recommendations for both companies to improve their financial management and earn more profit. So for the first recommendation is control overhead expenses. Both companies must check how much they spend on renting, labor, professional, rent and more. Secondly, the way to improve financial management is company need to conduct training and development. The companies need to share their knowledge with the whole team. As a team, they cannot just have only a few individuals to know about the knowledge. Besides that, both company, which is GDEC Express and Post Berhad, can use leverage technology to improve their organization. As we know, cloud computing technology become more popular and useful to many companies. By using cloud computing technology, our data will be in safe condition and people who are authorization and from multiple locations can access the data and work on it. Not only that, company also can make something new, which is let employee just work in their home. Lastly, we are suggest for both company to seek some advice to improve their financial statement. They should seek consultation that specialize in financial management to make their finance the company run well and earn more profit. From that, both company can get an advice from what they must to do and not to do in financial management. From all the recommendation, I believe both company can get and earn more profit and also can improve their financial management.
Within the analyzed time frame, Post Malaysia exhibited fluctuating financial trends marked by initial liquidity weakness in 2020, subsequent improvement in 2021, and challenges in 2022, whereas GDEC Express maintained consistent liquidity and asset management despite a slight decline in 2022. However, both encountered financial hurdles. Post Malaysia faced higher volatility in its financial indicator, while GDEX Express retains stability in liquidity and asset management despite challenge in return and operation. This underscores the need for unchanged financial strategy and operational optimization within both companies to bolster overall financial performance.